What's up, West Michigan? My name is Adrian. I'm a local realtor here, and today we're going to be talking about different expenses when it comes to buying a home. Now, the first one we're going to be going into, and very commonly brought up, is going to be the down payment of the home. Usually the first thing you think of when you're purchasing a house and what you need to come out with out of pocket. Now, this is based on a percentage of the value of the loan. All right, so let's go ahead and go into an example. So, different types of loans have different types of down payments. So let's say conventional 3%, FHA 3.5%, USDA 0, VA 0. Now, these may not all be standard if you are not a first-time home buyer. However, that's the average over here in West Michigan if you are. So let's go ahead and look at conventional. So if you have a 3% down payment on a $100,000 house, you're going to look at 3% of $100,000. You're going to have a $3,000 down payment. Now, obviously, the more expensive the home, the bigger that down payment gets. Then you're going to have closing costs. What are closing costs? They're going to involve any lender fees, realtor fees like admin, any kind of taxes, insurance that you need to pay up for the year when you purchase the home. And those are all going to cost you an average of about 2%. So already you're looking at about, on a conventional loan, 5% of the value of the home you'll need up front. Now, what are some other expenses that can come with it? There's something that we call a point buy down. What does that mean? Well, I'm not a lender, so I can't tell you exactly, but my basic understanding of it is you pay about 1% of the value of the home to buy the interest rate down. So let's say if you had been given a 3.5% interest rate, come up with an extra 1% to buy down your interest. Now you're at 3.1, or let's say you had a 6% interest rate, you did a point buy down and you would be at 5.5 or closer to 5.2. Whatever your lender works out with you, that point buy down is going to lower your interest rate over the life of the loan. So if you have no intention of ever refinancing, it could be a really good way for you to go. Next one is going to be lender fees. Those usually get incorporated inside of the closing cost. But what you're going to see is some lenders will have a 1% origination fee where they charge you 1% of the value of the home. Some of them will have admin fees or anything else along those lines. You could wind up with a couple other expenses. So let's go ahead and dive into a home inspection. Do you have to pay for a home inspection? No. You don't have to. It's not required. Do I recommend a home inspection? 110%, because it stops you from making a $100,000+ mistake. If you're not an expert in building and you don't have a long and extensive background in plumbing, electrical, foundation, you're going to want a home inspector. They're going to tell you everything that they can find wrong with the house. They're going to give you an idea of what it's going to take to fix it and what's actually a concern and what's just minor cosmetic. It's a great way to protect yourself, and if you don't do it, you can get yourself into a lot of trouble. Now, here in West Michigan, there are plenty of home inspectors you could choose from, but I can tell you that they cost an average of about $400 to $600 for an average sized home. Appraisal, at least over here, gets mixed up in your closing costs. But what it is when your lender orders an appraisal on the property to make sure that the home is worth what you're paying for, because they will not give you a loan past the value of the home. So that can range anywhere from $400 to $800, and that's just another expense that gets tacked onto that closing. Earnest money deposit. So when you get a home under contract, you have a 3-day period to get that earnest money, which is usually about 1% of the value of the home, into a title company, a third party who holds it. Now, that money doesn't just go away. If you back out inside the terms of the contract, meaning if you have an inspection window, you get your inspection, you don't like the stuff you see, and you back out, that money goes back to you. However, if you're 1 day away from closing and you say, I don't want it anymore, but there's nothing in the contract that allows you to back out, you give up that money to the seller. You're essentially saying, here is some money I'm setting aside to show that I honestly want to buy the home and that I got some skin in the game. That money doesn't go away at closing either. If you make it all the way to closing and you're purchasing the home, that can go towards your closing costs. If you got seller concessions or down payment assistance to where it covers all of that, they'll write you a check to give that money back. These are just some of the expenses that you got to be prepped for when it comes to buying a home. The loan process can be long, and you just got to know what you're getting yourself into. If you got any questions or you need help understanding any of this, my contact info is here on the screen. I'd love to help you out, and I'll catch you guys next time.